It's Tuesday, June 15th. This is The Street Live. I'm Catherine Ross, and I'm joined by Jim Cramer. Jim, first and foremost, what are you eyeing in the markets today?
Well, look, I think people are trying to position themselves for the Fed. I think there are a lot of people who believe that after Jamie Dimon's comments about trading revenue, they want to get out of the banks, which has been a very winning group that has clearly stalled. The steels and the coppers, which have been winning groups, are stalling. What that means, it tends to mean that someone believes that the Fed is actually going to change its tune and go against the economy. And then some of the junior and senior growth stocks are trying to get their footing after being up big yesterday. So it's a melange, it's a mess. No real conclusions can be drawn yet, but it's very obvious that people are very concerned about tomorrow.
Well, we've heard from people such as Paul Tudor Jones, and then Jamie Dimon, CEO of JP Morgan, says that JPM is holding a lot of cash because there is this is a direct quote, very good chance that inflation is here to stay. I mean, Jim, do these comments affect you? Do they concern you?
No, not at all. I've done more work on this than they have. That may sound arrogant, but it just has to do with my work ethic. And Jay Powell's right. Jay can switch if he wants to, but remember what Jay Powell said. He said inflation is going to run hot for a while, but he's thrown away the playbook. He is trying to help the working person. A lot of the very rich people that I hear tell me this is going to hurt the working person. We've had no inflation for 9 years, and yet every year I hear from these people that there's going to be inflation. And I'm sorry to be so adamant about this, but the fact is the people who have said that we're going to have inflation over and over again have been proven wrong. And I think Jay Powell doesn't want to fall in that trap. He has already said there will be inflation, and it's transitory. And so far, I think it is transitory. If you're a buyer of copper, you're discovered that copper's not going up anymore. If you're a buyer of lumber, you're going to realize, wait a second, I just got hit by a 2x4. I think that the commodity complex has peaked. I think that China has peaked. That some of that is because of illness, because their vaccines don't work. But I see many instances now where there's resistance to price hikes. And when there's resistance to price hikes, that's the beginning of the end of the inflation grip. I think a lot of things have been pulled forward, and that has caused inflation. And I think that why are we doubting Jay Powell? He has done such a good job ever since he first said, he made a mistake. He made a rookie mistake at the beginning when he said we need three rate hikes. He's learned. He has thrown away the playbook. He has done a fantastic job, and I'm with him. And by the way, it's not like he's been wrong. So why am I sticking with him? He's been right. And I don't regard Janet Yellen made a major mistake, but she had been there for a while, and she caused a big sell of 2015, 2016. I know that Jay isn't there to try to help the stock market, but I think Jay very much is there to help the working person, of which there are 300 million. There are certainly more than there are billionaires who come on and tell us what the working person needs.
So I want to bring up MicroStrategy, Jim, and I think that this feeds into our conversation because the way that people are turning to crypto at this point. And so MicroStrategy will be selling up to $1 billion in stock in order to buy more Bitcoin. We've talked about Bitcoin since Tesla has taken a step back from purchasing it. What do you think about a company buying Bitcoin right now?
Well, I think it's irresponsible. MicroStrategy has just become a play on Bitcoin. So if you want to play it, go ahead. That's not, to me, they had a business. I think they've become a binary play on Bitcoin. I think Bitcoin, I believe Bitcoin should be 5% of your portfolio, and I think gold should be 5%. I think they're a hedge against long-term printing presses by different governments, including our own, and I'm not in favor of that. That's a different argument from transitory. But I think that it's always good to have that. And I've replaced half of my gold as my allocation with Bitcoin. That's the suggested allocation that we've been making, and I'm sticking by that.
There was also the story, Jim, from this morning that Hindenburg published a short report on DraftKings saying that, and this is a direct quote, merger with SB Tech also brings exposure to extensive dealings in black market gaming, money laundering, and organized crime. I think you and I can both agree that we need to see a little bit more from this, but it makes me wonder if this is why you've been saying that Penn is the better stock to look at.
No. I really emphasize Penn in part because I have worked with DraftKings. and I respect them greatly. Hindenburg is an outfit that I respect greatly, and they can be right and wrong. They were right on Nikola, and they were certainly right on Lordstown. They were right on Clover until the shorts ran them over. They were wrong on GrowGen. They've been right and they've been wrong, and I have to do far more work. But I would say, again, why would you necessarily put credibility with me, given the fact that I have worked with them and like them very much? So there's a lot of people whom I think have a better call on this situation than I do. I'm damned if I do and damned if I don't on this one.
Let's turn our attention to your Real Money column from last night, which was also the beginning of your Mad Money episode, too. So you say this is a market of stocks, so you should shop around. And you very conveniently laid out for investors who haven't read this piece, you very conveniently lay out the picks if you were shopping like you would at a supermarket, Jim.
Right. Well, I just think that, if you take a look, you have the coppers and the steels, you're really getting clocked, and obviously then you have other companies that are doing pretty well. I have Twilio on tonight. I think Twilio is a stock that can do well. The junior growth stocks tend to do well if you believe inflation's peaking, and the cyclicals do well if you think inflation is going to continue to rage. I am of the camp that inflation is transitory. I know that there are fewer and fewer who agree with me, but to me, what kind of inflation I fear would be the inflation that if American Express, Steve Squeri, whom I interviewed yesterday at Bar San Miguel, if American Express was saying, listen, people are borrowing far beyond their means, that would be one thing. But the only people who are really, I think, creating inflation of endless sort are the venture capitalists who will spend any money. Like I was looking at what they were willing to pay for Plaid. They wouldn't pay for anything. They're the inflationary part of this economy right now.
Well, and Jim, in your Mad Dash this morning, you mentioned Amazon. And what I appreciated about it was that you pointed out the New York Times deep dive into the JFK 8 fulfillment center, but then you also brought up the JP Morgan note that we got that the customer likes Amazon. And as you said, the customer is always right.
Right. Yeah, I mean, look, I think that there's an overall tone in the media. And you could say, Jim, you're picking on the media, you're picking on the billionaires. No, I just read a lot. And when you look, and everyone should read a lot, so to speak, but when you look at what they're saying at Amazon, I mean, maybe Amazon should change its work practices. I mean, I didn't like what they said, but I am not going to then shift to Walmart. Now, we own Walmart for Action Alerts. The article today, in the piece in JP Morgan, was basically how Amazon could pass Walmart. I think that there's plenty of room for Walmart stock to go up because it's done nothing. But the idea that somehow we'll stop using Amazon because of the article is not something I think that anyone who wrote the article believes. I think that the article is about changing Amazon's work practices, meaning that if people at Amazon read that article, they might say, you know what, we have to put more money toward human resources. And that would certainly be very good. So I salute the writers. It was a great piece.
Well, Amazon is an AAP stock, and for those of you who aren't aware, the Action Alerts Plus members only monthly call with Jeff Marks is Thursday at 11:30 a.m. Jim, this is coming right after we hear from the Fed and during a week where it's been kind of quiet. So give us a sneak peek of what you're working on.
Well, I'm talking about the real risks to the bull market, like not the transitory ones, and what it really takes to derail this thing. Because I think next week I did some work with Larry Williams, who has been, by the way, the most accurate technician that we've had. He's much more than a technician, he's a historian. And he said that, remember, there's the last few days in June are historically bad. So, I mean, the traders probably want to take if you believe in Larry, and I think Larry's been very right, the traders might want to be a little more circumspect, but it might be an opportunity for us to buy. But I will detail what I am, I don't want to say afraid of, but what I'm concerned about and why it is not as critical as what so many of the billionaires are telling us could happen.
All right, and with that, Jim and Jeff Marks are heading over to Action Alerts Plus for their daily rundown show, which details all the stocks that they're watching and the moves that they're making in this market. Go ahead to actionalertsplus.com for more. I'm Catherine Ross, and we'll see you tomorrow.